Hello, my name is Andrew Keane. Welcome to Keane on America, the daily interview show about the United States. Hello, everybody. It's Monday, August the 17th, 2026. Yesterday, we did a show. That was the week show, Tech Summary, with my old friend Keith Tier, based in Palo Alto. And we talked in part about whether or not we were in an AI bubble. There was an interesting piece this week in the New York Times about the way in which the AI companies and the big tech companies seem to be conspiring to, if not create a bubble, certainly the illusion of massive economic growth when they're perpetually feeding themselves. And two people who have been on the show before to talk about economic bubbles are my guests today. They're the partners of Practical Venture Capital, two very seasoned investors, entrepreneurs, Dave McClure and Aman Verjee. Dave is talking to us from West Virginia, from Morgantown in West Virginia. And
Howdy.
Aman is in Atherton. We were joking before we went live, guys, that you couldn't be further apart geographically or symbolically.
Yes.
Aman, isn't Atherton the most expensive suburb in America?
You know, I have not seen the latest rankings. I wouldn't be surprised if we were up there. It is a lovely place to live. Yes, right here in Northern California.
And how's Morgantown, Dave?
It's not quite Atherton, but this is my hometown. I'm back here visiting family for a little bit.
Maybe that should be its tagline, not quite Atherton.
In all seriousness, home of the Mountaineers.
Yeah. In terms of the manifestation of economic bubbles, I know, Aman, your new book on economic bubbles is out this week, A Brief History of Financial Bubbles. I wonder whether the evidence or the forewarnings of bubbles, the auguries of bubbles, are better seen in places like Morgantown or Atherton. In other words, in wealthy neighborhoods or less wealthy neighborhoods. Maybe, Aman, you could address that first.
Well, I think the nature of the bubble tends to run in asset classes. It tends to be the way that I define it, and maybe I think Keith defines it a little bit differently, your guest from yesterday, is just a big run up in some kind of an asset price. And then over a very short amount of time, it runs back down again. So it's relatively symmetric. It's a symmetric up and down in a price of an asset, and it doesn't last. And it's usually typical of a asset as opposed to, you know, income or job activity or other things like that that can have knock-on effects. So where you have assets, where you have wealth, that's usually where you see the behavior, the excitement, and some of the things that go along with the bubble a little bit more than what I might call middle America, you know, places where you don't have the same amount of assets and where stuff is tied to more like the real economy.
Dave McClure, you've been through this before. We all have. We're not new to this rodeo. We were all around in the 90s when the dot-com boom busted. Are we in a bubble, Dave, when it comes to AI?
I don't think we're in an unusually large bubble. I think that actually there's several companies that really are making quite a bit of revenue, if not also profit. And so I think the increases in valuations, at least for NVIDIA, certainly for real public tech companies, I think are generating substantial revenues and profits. And even for the private companies, I think we're seeing SpaceX and Anthropic and OpenAI grow revenue at pretty crazy rates. And, there might be a question about whether that revenue is profitable or not. I think more and more we are seeing that it is profitable. That might be a question of, amortization over time, how much the CapEx that's being spent is profitable or not in the future. I think there's probably a lot of other companies that are draping themselves in AI sort of magic sauce and, getting valuations that are perhaps optimistic. And those companies, that's where I see there's the potential popping of a bubble in the future if they aren't really AI companies, and I don't think all of them are. Then we might see some, decrease in those valuations in the future. But I think there's definitely some very, very large companies. There's incredible growth in revenue, certainly in Anthropic, historic growth, and more the potential for profits as well.
Aman, you and Dave were back on the show, as I said, in December of last year. So
yeah,
7 or 8 months ago. And we talked about, quote unquote, this was the title at least of the show, The Naked Truth about Elon Musk and Sam Altman. You guys know both. You're both part of the old, or certainly Aman, you're part of the old PayPal mafia, so you know these guys very well. And I know, Dave, you also know them very well. It's interesting that the one guy missing from that is the Anthropic CEO, Dario Amodei, who at that point seemed a minor player, a bit player in the Sam Altman, Elon Musk drama. Now he's the main guy. Is that fair, man? Does it speak of how quickly things change? 8 months is like 8 centuries in Silicon Valley.
Yeah, absolutely. I know we didn't spend a lot of time talking about him specifically, although we did talk a bit about Anthropic. And I think, like Dave, I share the view that while there are a lot of companies that are draped in that AI magic, and a lot of them won't make it, and a lot of companies will go by the wayside. The macro environment I was still very positive on, and what we did talk about was there will be lots of folks who are lots of great entrepreneurs building great businesses, and that rotation will change. I think about 9 months ago, the consensus view was that SpaceX seems like it's on track to have an IPO in 2026, although we weren't talking about $1 trillion IPO back then. They had just raised at $400 billion, or doing around at $800 billion. And Sam seemed to be the king of the world, and OpenAI seemed to have the lead on the consumer side. And then I think what happened was Anthropic earlier this year kind of found a niche with small and medium-sized businesses, and they focused on coding agents. And that became the source of revenue for really the entire AI application layer and the model layer. And their revenues are on track. They just filed this weekend, or at the end of last week, to go, I guess they have been on file to go public, but they leaked their valuation numbers at $2 trillion for the IPO.
Yeah, quote unquote leaked. I'm sure it was a very intentional leak. Yeah, there was a piece yesterday in Reuters about apparently their valuation hinges on between 190 and $200 billion revenue, 2028 revenue forecast, which
might be conservative, actually.
Yeah, you think?
They could be at 120 then at the end of this year, and going up
given the growth rates
year over year.
So, Dave, what does this tell us then? 8 months ago, we talked about Elon and Sam. I mean, they're both very significant now, of course. Their companies, SpaceX went public, OpenAI is about to go public. What does this tell us about the market, Dave? That suddenly, in this sort of Silicon Valley wacky races, Anthropic seems to have pulled ahead.
Yeah, well, I think probably sometime after when we spoke, between Q4 and Q1, things really changed, at least considerable change in the fortunes of OpenAI and Anthropic. I think OpenAI probably had a lot of challenges. It seems like they're past a fair amount of that now. But I'm reminded of the famous quote: "There are years when nothing happens, and weeks when decades happened." And I think
Lenin said that.
Yeah, so I think somewhere in February, March, April, there were probably several weeks where a decade worth of progress happened. But I think Aman is correct that it seems like Anthropic made a pretty good bet on focusing on coding platforms and agents. I was kind of hearing that might have come from watching Cursor and seeing what was happening at Cursor around the same time. And notably, Cursor was just acquired by SpaceX. I think that closed on Friday. I think across the board, we're going to see acceleration of revenue in all three companies, SpaceX, OpenAI, and Anthropic. And so that's why I really don't think it's as much of a bubble as people are worried about. Again, there's possibly other companies where they might stumble and fall, and we'll actually probably see some of that in more traditional areas that are SaaS companies. I think the SaaS apocalypse also happened during that time frame, possibly as a result of all the progress that was happening.
And SaaS, you might explain to our non-technical audience.
Well, SaaS was really cool 10 years ago. It became decidedly a lot less cool.
It's essentially
about a year
cloud
ago.
companies. Is that another way of putting it?
Cloud computing, generally speaking, and
So like Salesforce.
revenue. Yeah, but I think the concern or issue there is that the cash flows from SaaS companies are now perceived to be a lot less durable as a result of disruption by AI companies. And so we're seeing, tremendous acceleration of revenue by Anthropic and SpaceX and OpenAI, but we're also seeing them encroach into, areas of business that you might not have expected previously. So design and legal and medical and other areas. And as they make announcements about each of those verticals, you see knock-on effects in those traditional verticals. I say traditional, but these are really, tech software businesses in those verticals that get their, potential future growth rates cut at the knees, and that's probably having a pretty big impact on how people think about investing.
Aman, you, as I said, you're part of the PayPal mafia, so you know Elon quite well. Is SpaceX an AI company? I'm not really sure I know the answer to that.
At the start of the year, I would have said not really. We actually underwrote it, and we made an investment in it as a firm, in part just because we knew the founder and we knew of the company historically. But they were really about putting rockets into space. And if you'd asked me back then, I would have said Elon has a separate XAI AI company, which was primarily Twitter, which was primarily Grok, their open source platform model, and they were working on things that were tangentially interesting to SpaceX, but not integral to the business. And then they merged with XAI at the beginning of the year. And if you look at their revenues, at least, Elon is guiding to $100 billion in ARR at the end of the year. And probably, he hasn't said this explicitly, but I think somewhere between 50 and 60 billion of that 100 billion is now from the AI business. And probably less than 10 will be the space launch business. And then there's another, 40 billion in Starlink, which is their connectivity business, which integrates both. So I think it has now become, on the roadshow, they did use the word, they had you might remember the S1 that they wrote and then leaked. And then I think for the first time, maybe in history, your wife would know better because she's the securities lawyer. I don't remember a company putting forward-looking projections into S1 or 424B. I was told by my lawyers when I was a chief financial officer, don't you ever do that. You will get sued. But in that 308-page document, they did put out 3-year revenue projections, and they talked about the revenue track of being more than $300 billion annually for that company. And over half of it is in AI. And if you just count the number of times they use the words artificial intelligence in their prospectus, I think it's over 1,100 times. I didn't count it myself. I used AI to count it, but
they probably used AI to write it.
Yeah. They describe
probably Grok. I hope they use Grok rather than Claude.
Well, the thing that they do, though, if you think of the AI stack as being models and applications at the top, so things like Cursor, which is part of now SpaceX and generating meaningful revenue. There's LLMs like OpenAI, and let's not count Sam out yet. He will be back, I think, with another.
Not at all. I don't think we should at all.
And then you've got all the infrastructure. You've got the compute that's required to power it all, and it's the entire Anthropic business runs on somewhere between 1.3 and 2 gigawatts of compute and capacity, and for that they're supporting $70 billion in revenue. SpaceX is now one of the premier builders of AI compute. As a part of the acquisition, they have this computer called Colossus in Tennessee. They've built Colossus 2 and 3. They're building out these data centers. And they are now supporting almost 2, or will be at the end of the year, supporting almost 2 gigawatts of capacity. And if you listen to the earnings call, their first earnings call, their CFO, Brett Johnson, talked about going from 2 gigawatts of capacity to between 5 and 10. I think Elon said closer to 10 than 5. So let's give them the benefit of 8 gigawatts of capacity. They could be powering much of what Anthropic and what maybe OpenAI and what Grok and what some of these open source models do. So
didn't Elon say a few weeks ago that eventually SpaceX be worth more than the entire Earth or something slightly Elon-esque, like absurdly Elon-esque like that?
He says a lot of things.
I think Elon's sort of notorious for saying outlandish things and setting, astronomical targets.
Dave,
I really,
Aman said that you guys invested early at Practical Venture Capital in in SpaceX. Are you still confident and you hold on to your shares? I assume you've made a tidy profit out of that. How early did you invest?
We got into a position, I think, probably in 22. Aman, I'm trying to remember the exact time frame. Said about 70
Why don't you just
billion.
shut everything down and go and live, go and buy your own island somewhere?
I mean, it's not the entirety of our portfolio, but it is now the biggest position in our second fund.
You can't sit on your wins there, Andrew and Dave. You got to quote Bill Belichick. It's on to Cincinnati. But Dave's had some pretty big wins. I don't want him going anywhere yet.
At least on to Morgantown, West Virginia. Are you still confident? I mean, holding on to it? The markets, it seems like the public market's ambivalent at the moment about SpaceX. It seems to go up and down.
I will say I was a lot more skeptical probably 9 months ago than I am right now. I think if we looked at the recent earnings report that came out from SpaceX, they kind of crushed the numbers pretty much across the board. I don't think we were surprised that they were doing well with Starlink. That's always been, sort of what's been working at the company. And I think there's, maybe some caution about the CapEx spending that's going on in the AI business. But what was really pretty amazing, I think, if you look at the moves that have happened in the last 6-9 months, from the acquisition of the XAI business, which a lot of people were pretty skeptical about, whether that was a real business or not. They bought it for $250 billion. That was largely a private transaction that Elon approved as, the owner of SpaceX. And what happened after that was, a lot of, the people that were at XAI left. There was some concern about whether XAI was really doing well or not. They subsequently, made the deal with Cursor to acquire Cursor. They set up 2 deals, very big deals, renting out compute to Anthropic and Google. And all of that happened probably in a matter of maybe 3 to 6 months. I'm not sure of the exact timeframes there, but pretty much since the beginning of the year and, by June, all those moves have been made. And I don't think I've seen anybody pivot a company that quickly at that size in such a short period of time. And if you'd asked me, whether the company was worth $1 trillion at the end of last year, I would have said probably not. If you'd asked me today, do I think the company's worth $2 trillion? I'd say I'm pretty sure it's going to get there by the end of the year. If we believe the projections of revenue that Elon is talking about right now and where they expect to get to by the end of the year, I do feel like the valuation is sustainable. And really, that's a pretty big change in my opinion in the last 6-9 months.
Well, when the facts change, one's opinion changed.
But
Dave, I know you're.
I don't think people really understand how much of a pivot that was. Like from thinking about XAI as a frontier model competing with Anthropic and OpenAI, seeing that kind of blow up in a way, and then acquiring Cursor, renting out compute to previously what you would consider 2 competitors. Now all of a sudden SpaceX valuation is actually based on Anthropic's progress.
Which also speaks of the circular nature, certainly the somewhat incestuous nature of this economy. Maybe Elon's middle name should be Pivot. I know, Dave, you and Aman don't always agree on politics. You're probably more in my camp.
That's the understatement of the century.
You're not a big fan of Elon's politics. I'm not sure if Aman is.
I am not.
Certainly, you're less of a fan than Aman. You and I are less of a fan. But I wonder, how do we square the fact that Elon is clearly a financial or entrepreneurial genius, and at the same time, his politics are incredibly dubious? Do these things, is there something unnatural about that? Or do we just have to accept that there's a good and a bad Elon?
I'm not going to make any assessments of good or bad. I'm just saying that's not, my preference that he be involved in politics, and his political moves are not my favorites. I sometimes share a similar view of my ex-boss, David Sachs. I think he's a brilliant investor, brilliant entrepreneur. I don't agree with his politics.
Is he still a AI czar or just?
Well, he's no longer in the administration. He's back, I think, raising a new fund, in fact, for Kraft. Full disclosure, we're LPs in Kraft as well. So, I think you have to sort of maybe distance the art from the artist and look at the work. I think I own a Tesla. I've been a subscriber on Starlink, and I do think that Elon's products are terrific, and I think he's an amazing entrepreneur. I don't ascribe to his politics, and I'll just leave it at that.
Aman, what about Sam? Let's talk about OpenAI. There was a headline last week in the Financial Times.
Yeah.
OpenAI upheaval mounts. I mean, it seems to have been mounting now for months as Sam readies the IPO push. So many senior people have left. You nodded when Dave said that we shouldn't write OpenAI or Sam off. But should we be a little concerned? I mean, you're a SpaceX investor. I assume. I mean, your business is in the secondary market, so you must deal with a lot of OpenAI equity. Why shouldn't we be concerned with all this upheaval at OpenAI?
Oh, I think you should be. I think they have gone through one of the reasons I was a little more ambivalent on them at the start of the year, although I thought they did have that leadership position in the consumer side, was that there was a lot of management change, and the number of people on that management team that have been moved off or sidelined or moved into different roles has been startling. In addition to just all the board drama from a couple years ago, they've had folks like Kevin Weil resign, Bill Peebles left the company. Brad Lightcap was the COO. He's doing something else.
He announced his departure last week.
Yeah. Sarah Fryer, the CFO, who I like a lot. You can just tell slight, disjointedness between her and Sam as they're talking to investors. I don't think there's anything, critical there. But when you lose founders like Ilya Sutskever and Mura Murati and John Schulman and Andrei Karpathy, and then your CFO and CEO, I think there's a lot of new people. I guess what I describe it as it's a new team. And when a new team comes together, they're just, they're still, what's the term? Storming, norming, and forming, whatever that HR aphorism is. And so they're still learning how, who's got the ball, who's going to play, who's got that coverage, who's going to find that open space. Oh, wait, I thought you were supposed to pick that up. I don't remember how
I think we made the note on our own podcast that there's been more changes at the OpenAI board level than there's been drummers at Spinal Tap.
Yeah, well, Aman, you were on the show last year as well.
Yes.
And one of the things we talked about was what Yogi Berra can teach Silicon Valley about booms and busts. I wonder what Yogi Berra would say about OpenAI and all these changes.
He'd probably come up with something. I'm a big baseball fan, as you can see. He'd probably come up with something very, very witty about, predictions being difficult, especially about the future.
Right, and, exactly. But I mean, Aman, you're not a bum thrower. But in your own way, are you suggesting a deep concern about OpenAI?
I think you got to be concerned about, especially in an IPO, where I've been through them before, and you just have to have the team hitting on all cylinders. And when there's a lack of coordination, even if you have a bunch of superstars, it always takes a couple of games for the United States Olympic basketball team to beat France or whatever. I think their 2024, 25 was just a lot of change. And then 2026 was a lot of their storming, norming, and forming. And then they missed the coding trend which is generating all the revenues. So they're now on top of that. I think their new, GPT 5.6, Sol and Luna and Terra are A+ models. They still have a very strong lead on the consumer side. I would bet at the end of the year, you're going to see them at around, let's say, $40 to $50 billion in ARR. Probably not profitable.
I think they're already there, Aman. I think they're already the numbers that were reported.
Is there room, though, in this market for three dominant players?
No, I was going to say it's a crowded lineup. We've seen great companies that have been around for a while doing it well, like Databricks, just kind of bow out and say, we're not going to play the IPO game right now. We have SpaceX, which is sucking up 75 to 85 billion of capital. That's already putting a big dent in the IPOable market. Let Anthropic go next. If those two trade well, and I think so far SpaceX is fine, at or above its issue price volatility, but we'll see how Anthropic does. If we close out the year with some momentum in the IPO market, it'll break all the records for money raised. Then I think 2027 is going to be a better environment for OpenAI to go out with call it $100 billion guide on their revenue number, a better definition around their business model on the coding side, some new consumer products, maybe not being as capital intensive. They'll have to figure out how to continue that growth rate. I think 27 is that's probably their time. But, it kind of goes back to you have to find the right time, and the team's got to be performing. And I think they've had a year now to gel with the new team and the new managers. And I think that if they can execute that plan, I think they'll be just fine. The valuation won't be where Anthropic's is, but I think they can get above $1 trillion in the market at the right time.
Do you agree, Dave? I mean, I get the sense just as an outsider that most people were expecting an OpenAI IPO this year. So if Anthropic goes first, will it seem like a defeat to OpenAI if they're third?
I'm sure that if you were, sort of watching a year ago, you might feel like, OpenAI has fallen from some great height, to second place and potentially third place if you're looking at SpaceX. But at the same time, I think Sam is a pretty savvy operator, also, an amazing entrepreneur. I think the company's probably found its footing. It's still got some, things to figure out. Particularly, I would say, a lot of the financial support that we're seeing this past week from NVIDIA across the board, not any one company in particular, just broadly. That's going to help stabilize a lot of the CapEx concerns and debt financing concerns that might have been troubling OpenAI. So my guess is I'd be very surprised if they don't have an IPO at least by Q2 of next year. And in fact, I would guess it'll probably happen in Q1. And I would expect that'll be at least at a $1 trillion number. And probably, my guess is it'll probably be closer to 1.5. So we'll see what happens, but I have much less concerns about OpenAI than I did maybe, again, 6 months ago based on some of the recent progress and pivots that Sam has made. So, I'll probably say this for a little bit of a hot take, but I'm going to bet that Anthropic will be a $3 trillion company, SpaceX will be a $2 trillion company, and OpenAI will be a $1 to $1.5 trillion company by Q2 of next year.
Nice. Hey,
Aman, you're nodding. Those are.
I don't think it's a problem to go third. By the way, do me a favor.
Yeah, really.
You and your audience, do me a favor. Put these IPOs in order of timeline: Yahoo, Lycos, Excite, and Google. Which one do you think went fourth?
Google was fourth for sure.
Right.
Yeah. Don't worry about.
They did fine.
Google did fine.
Yeah, but
Lycos not so much. So it's better to do it right than to do it first.
Okay, well then let me rephrase that. Given you threw out Excite and even Yahoo, who's the Excite in this market? We've been through this before.
You mean, yeah? Go ahead if you have a take, Dave.
I'd have to think about that one a little bit. I mean, it's not really the same parallel, but I think you're talking about people that might have been trying to solve problems with the previous generation of technology, and I think that's SaaS companies. So I think that's. Those are the companies that I would be concerned about in this market. I think, again, let's just kind of state for the record again, OpenAI is probably going to be doing $40-50 billion right now, could be doing, $100 billion by the end of the year. A company doing $50 billion in revenue growing at 2x or better per year. And, we can talk about profitability there. I think is going to do just fine.
Well, but isn't the profitability key? Because they're not profitable, and it requires more and more money for data centers, massive infrastructure. So however much... I
think the question is, will it be profitable in the future? Right now, growth is more of an issue than profitability. But the real issue is whether they could stand up the debt. And I think that, there were some interesting sort of ways that Sam was trying to play that game before, and Oracle maybe coming in, and Stargate, I think, with SoftBank. But now that you're seeing across the board NVIDIA making moves to bring in a bunch of financial service providers, backstop the entire industry with $500 billion worth of capital, I really think that we're probably in okay shape. I mean, you could maybe be concerned about whether Anthropic's growth and revenue continues, but I don't see that being a problem.
So given NVIDIA's role, is there an element of circularity here, Aman? You're nodding that it's obviously in NVIDIA's interest that these companies survive because they're the ones who buy NVIDIA chips. Is there a circular element here?
There's a part of circular financing, though, that is quite normal and reasonable in asset-backed finance. So when I was the CFO of Sonos, for instance, we were building hardware, consumer electronics. And we would work with suppliers, manufacturers, some of them out of China. And the way that we did it is we bought these things from China, and we had 90-day payment terms. And so the contract manufacturer would just be extending financing to us. And then we'd sell those Sonos systems through Best Buy and other, channel providers, and we'd be getting 30-day payment terms. So we had a negative cash conversion cycle, which just means you're getting money from your customers faster than you're paying off your CMs. And as long as, and that's not, if you think of I just heard the CNBC special with Jensen and the 6 private equity players, and I got, much more comfortable, I think, than I did, than I was before with those financing arrangements. But it's like buying a car. You can go to buy a Corvette from General Motors. You can pay cash, but who can afford $100,000 for a Corvette? You can get a loan from a bank, a third-party bank, on reasonable commercial terms. Maybe put $10,000 down, finance the other 90, or you can get a loan from GMAC, General Motors Acceptance Corporation. And when they extend you the money, as long as it's on commercially reasonable terms and third-party terms, they can also securitize and sell those bonds in market. And I think what we've created is an asset class, to Dave's point, that is an AI infrastructure asset class. People want to invest in it.
Financeable asset class.
Yeah. And CapEx has exploded in the last 3 years, but it's building real assets with real value. I think Intel and other companies have been depreciating their chips over 3 years, 4 years, but it's like your smartphone. Your old smartphone, it does kind of work fine. It just sort of obsoletes. These GPUs are like cars. They don't just obsolete in 2 or 3 or 4 years. I think they are, and NVIDIA sees this, I think they are financeable over 8, 9, 10 years. And NVIDIA is now pulling in other third-party players to finance it. So the red flag would be, is NVIDIA putting in money to their customers, and then their customers pay them their own money, and then NVIDIA, but not on commercially reasonable third-party terms. NVIDIA's like, hey, if you buy a certain number of GPUs, we'll forgive 10%, 20%, 30% rebates. We end up with bad debt because the asset doesn't work or it's not financeable. I think the demand is real. I think the assets are financeable. The fact that Goldman Sachs and Apollo and Brookfield and KKR, I can't remember all the 6 of them, but there were some major players who are putting their own money in. And as long as that's a really good positive signal, I think, that shows that you shouldn't be that worried about the circular financing any more than you are with aircraft leasing or General Motors.
Buying iPhones using
well, that would be different.
Using Apple financing. Dave,
Yeah,
you're in West Virginia.
Exactly.
You grew up there. So if things are relatively rosy in the financial garden in terms of a crash, what about the impact on America itself, on places like Morgantown in West Virginia? Lots of articles like this recent one in the Wall Street Journal about a jobless boom. Are you concerned with this, that it's fine if you're Elon or Sam or Dario or the 3 of us, but for most of America, no one's really seeing the benefit of this current boom?
Well, I think they are seeing the benefit in certain ways, but that's probably mostly if they are an equity holder. And I do think there are some concerns for middle America, and certainly maybe the lower third of America. If those jobs that they're performing are not, AI-based jobs or jobs that are positively impacted by AI, in fact, they could be negatively impacted by AI, then we do have some concerns. And, we probably already see some concerns about the cost of electricity in these communities. There might be concerns about, other potentially negative impacts of those spending as well. I think people are generally optimistic that technology historically has created more jobs than it's destroyed, but it certainly provided displacement of jobs. And there might be, retraining that's needed. There might be people that can't, necessarily, take on those new jobs if they are, much more involved with AI. I don't know that I want to make a prediction there. I would just say that it is reasonable to be concerned about whether people who have previously been doing, service provider jobs in other areas are going to be able to keep up. That said, I would say, a lot of the business here in West Virginia is in areas in healthcare related areas, probably in energy related areas. And I do think we're going to see both of those growing in an AI world. So I don't know what the outcome will be, but it is prudent to probably be at least cautious and monitoring what's going on.
Aman, there was another interesting piece last week in the Wall Street Journal about America becoming a nation of Luddites. This is the summer of 2026. Lots of pieces about the rejection of data centers in rural America. What's your take? Is this summer fair for newspapers because not much news is happening. Are you concerned about this shift to tech skepticism, both on the left and on the right in American politics, and this hostility to AI? Is this going to, if not bust the AI bubble, if there is indeed a bubble, at least slow the growth?
I would say I'm concerned. I think that it's probably not great that to Dave's point, I think these technology revolutions aren't new, and it's something I cover in the book. We saw, I think, more technology happen faster in the 1920s, certainly in the 1880s with the railway boom, probably the 1990s with the internet. I think all those were periods of extreme change due to technology that happened more quickly than what AI has done so far. The optimism, though, I remember the internet optimism where it was going to make life better. We're connecting people. You can go back and read the press in the 1920s about just life getting better with technology and electrification and the assembly line. And even in the era of the Luddites, there were far more, I think, optimists than pessimists if you just surveyed people. And the economic growth was happening, and so people could see the benefits in real time. This is one of the few revolutions, maybe not the only one, but one of the few revolutions where the leaders in the technology, AI in this case, are so dour about it. You hear Sam talking about it and how it's going to threaten jobs and create idleness. Dario has been on the record, I think, about a year and a half ago, he said that AI was going to destroy half of knowledge entry white collar workers within 1 to 5 years. His prediction is already wrong because we're a year and a half into his prediction, and we haven't, it doesn't seem like we have a 10 to 20% unemployment rate, but that is what he said. And when you start predicting things like that, I think it's natural to get the political hackles get up and people get concerned about employment. They're concerned about data centers. We've seen the evidence, though. Data centers bring jobs, they bring skills, they bring manufacturing talent to these communities. They increase the tax base. They're self-financed, so they're not stressing the tax base. You can tell them that you have to pay for your own power. You have to be a contributor to the grid, not a detractor from the grid. They can play by those rules. And yet there is a brewing political backlash from, I think, both sides. And that is kind of concerning. But the thing to remember, I think, was what Dave McClure just said before, is it's not a net destroyer of jobs. It will displace jobs. That's happened before. We've seen entire job categories eliminated within 10 years. Back in the 1970s, the number one job that women had in the workforce who didn't have a college degree was secretary, typist, stenographer, clerical work. We had between 4 and 6 million of that job category in the early 70s. Within a decade, those women were displaced. Those jobs were displaced. They either entirely went away or dramatically changed. And yet the labor force participation for women in the early 70s in the US was 52%. And today it's like 77%. So the jobs not only just didn't get, the jobs did get displaced, but a whole new category of jobs arose that you couldn't even imagine in the 70s, whether it was IT, programmer or computer consultant. My daughter wants to be a YouTube influencer. I don't really even know what to make of that, but that is not
everyone's daughter wants to be a YouTube influencer. I'm not sure.
I think there is going to be an incredible amount of growth in solopreneur or small business entrepreneurship that's backed by AI. And I do think for people who are entrepreneurial minded, and this is not necessarily they'd have to be technical. I think this is just people who can go after interesting businesses. And instead of hiring 5 to 10 people to do those businesses, maybe they hire a couple people and build a business with AI. I actually think that could be a very big growth area in the future. Now, whether that's going to provide enough jobs for people who are no longer driving trucks because we've got AI-driven trucks out there, I don't know. I do think that factory automation and robotics automation are going to displace a lot of jobs that maybe people associated historically with manufacturing businesses. I think that that's very possible that we're going to have a much lower, ratio of human capital required for these businesses in the future. But that doesn't necessarily mean that all those people will be jobless. It really just depends on, how creative they are about finding new jobs and whether we can provide some help for them as they transition.
Well, when you say whether we can provide some help for them, we, of course, is not the three of us, it's the government. Keith Teare, I know you know his work, is
Sure.
Always very ambivalent about regulation, the government. What's your position, Dave? Do you agree with Dario and Sam that some of this industry needs to be regulated? Keith seems to think that they're calling for regulation in order to secure their own market dominance. But isn't there a need for more regulation?
I think you just bridged to two different questions. One is, are we going to provide some sort of social safety net for people who might be displaced from jobs? The other one is, are we going to regulate these companies? And I'm not a big fan of over-regulation, particularly when I think there's a lot of competition happening outside the US and in other countries. We should be aware of whether regulation slows, the overall country down. But just in general, I'm less of a fan of that. But I do think we have to be aware of how society changes. And, historically, we would have technological change. It's been over the course of a generation or two, the railroads, the steam engine, electricity itself, even the earlier incarnations of the internet. I think the thing that's happening now is the changes in AI are so rapid and so dramatic and so fast. Do we have enough time to adjust? When those changes take place over a matter of 3 years instead of 30, how quickly can society adjust to that type of change?
Aman, you've just published your brief history of financial bubbles. You've looked at everything from the railway boom, the tulip craze, the subprime boom, the subprime bubble of 2008. How would you historicize AI in terms of this supposed abundance of intelligence? What's the most comparable technological leap forward?
I would probably point to two of the 10 bubbles that I looked at. There were 2 positive bubbles, and then there were about 6 or maybe 7 destructive bubbles. And the 2 positive bubbles turned out to be 1845 in the UK, the railway boom back in your home country in 1845 to 1849, and the other one was in the US. Primarily, it was the tech boom from 97 to 2000. And in both cases, there was an overbuild. They built stuff too much, too fast, ahead of demand, and the demand eventually came for the railways and passenger rail, or for the internet. But the investment boom came and went, and it resulted in a decline in the asset prices. But it left the world with a valuable technology, which I think is something maybe closest to where I don't really think we are in an AI bubble, for reasons I think similar to Dave that we can talk about in terms of valuations and just the real businesses. But to the extent that there's an overbuild happening, it'll leave the world with a new, more valuable technology that I think will pay benefits. Just as a comparable, before the internet, there was if you had bought all the stocks founded during that internet boom from about 94 to 2000, you would have owned NVIDIA and Amazon. They were founded in 93, 94, Google in 98, PayPal, where Dave and I worked and met in 98, eBay and Salesforce and Broadcom, and Amazon. And even if you had held your stocks from that point all the way to 2020, you would have made money. Now, you would have had a big upturn in 2001, and you would have lost 70% of it in 2002, 3, 4. But if you had held your stocks through that whole period, you would have been just fine, because the value created in the long term did actually justify the amount of money going in. It was just a timing difference. And similarly, you referenced the Luddites who were in 1811 in the UK. The railway boom happened in 1845. There was a long boom, and right after that bubble burst in the railroads from 1850 to 1873, called the Long Victorian Boom in the UK. And it was a time of rising incomes for everybody, technology-driven leadership at the end of the Industrial Revolution that left the world far better off than it had been. And that's the thing to remember, is that I think Dave's point was right on. If you can get people to embrace that positive change, understand that there will be transitions, whether the government provides training, whether the private sector does it, your schools have to teach AI and teach our kids how to use AI in this new world. As long as that happens, then the long term, I'm very optimistic about.
We did a show recently on 1873, the long depression of 1873, which is seen now, I think, as the first global economic depression. Should we be fearful of that, Aman, and of a repeat of 1873, of the entire global economy falling into the doldrums?
I don't. We should always worry, I think, about these downsides. The causes of that particular bust, I think, had a lot more to do with the financial sector. The UK was on a gold standard, and so was the US. It was right after the US Civil War. If I look at the period from 1870 to about 1900, let's just focus on the US. Right after the Civil War, where you had all this technology happening, it was a period of tremendous economic growth. The population here in the US essentially doubled. There was a huge inflow of immigration between 1870 and 1890. Agricultural production doubled. and mining and manufacturing went up, I want to say 8-fold and sixfold respectively, although it may have those numbers inverted. And so you look at the state of the economy all through that whole period, and it was a period of consolidation. You had big companies like Standard Oil, and you had the Rockefellers and the Carnegies, and you had large companies getting tremendous amounts of power. But at the same time, what happened to freight rates between 1870 and 1890? They declined. What happened to steel prices from 1870 to 1890? They declined. What happened to the price of oil? 1870, 1890 went down by 60%. And then you had all the trust busters and all that stuff in the early 1900s. But even the result of that power, that consolidation, that entrepreneurial capitalism, that concentration of wealth was unquestionably positive on average for median people, for people in the workforce, working class, for women, for minorities, for just about everybody in those countries. And so there may be periods of dislocation, 2, 3, 4-year recessions, ups and downs. But the most important thing is what happens over the long sweep of history. And technology has a very important role in improving that growth, because it comes down to productivity and how capital and labor work. And
although, of course, Keynes famously said, in the long run, we're all dead. I'm not sure how long run we're talking about.
Right. It was right. Well, it may be, you have to think. Dave and I run a venture fund that has a 7-year term, and a lot of VCs think in 10 to 15-year increments. So I don't think it works. Capitalism doesn't work quarter to quarter. It doesn't go up in a straight line up and to the right. But
people can be very reassured. You guys are very calm. I guess you have to be as investors. But Dave, there's lots of, just today, Michael Burry, a particular pessimist, warns of the market bubble.
Yes,
Times ran a piece on.
He's called 9 of the last 2 bubbles.
Right. So a clock is always right twice a day, a broken clock. The New York Times seems to run a piece every day about AI hype running into reality. And then there are real manifestations of certainly exuberance. There's the Leopold Aschenbrenner story, a seeming young genius who lost a lot of other people's money. Is there an argument that this is a boom? What do you make, Dave, of the Aschenbrenner story? I'm sure you saw it. You had front row on that one.
Yeah, I think that was more a problem of leverage, not of the boom per se. He probably got caught between a lot of volatility in the market, and I think he was running at 4x or more leverage. And at one point, had to find a backer or sell most of his public stocks. However, he did, as far as I understand, hang on to the Anthropic position that he had. So it wasn't a problem of the AI stocks that he was holding. I think it was just a volatility in chip stocks that caught him with his pants down for some period of time. And
yeah.
I have a feeling he'll probably come back with new backers. And, the guy's only 25 years old, I think. And I believe his fiance, I don't know if he's gotten married, but his fiance is Dario Amadai's chief of staff. So he's probably got pretty good insights as to what's happening in the AI world. I have a feeling that guy will be just fine. Again, I think it's hard to say what is going to happen. There's certainly going to be a ton of change. There's definitely possibilities that change will impact people negatively. Frankly, I'm probably more concerned about the overall U.S. economy from just a deficit perspective and budget perspective more than an AI bubble. I think we should be concerned that we're running, pretty tremendous deficits and outspending our national budget on a regular basis. I think now the largest single line item in our national budget is the interest on our deficit. So that's probably way more of a concern. Unfortunately, I don't think either party has a good track record in reducing that deficit. And we are seeing pretty increasing crazy costs in healthcare. But I am pretty optimistic that the productivity gains from AI might be able to help that situation. I think we're going to see tremendous, even though we're going through quite a bit of challenges with the situation in Iran and Ukraine, I think we're going to see tremendous advances in healthcare, in energy, and physical automation over the next 5 years that really will benefit society very broadly. So I'm again optimistic in the long run about the changes that will, benefit humanity, but the upheaval in the short term could affect certain groups negatively, and those are real concerns that we should be watching and paying attention to.
Yeah, I think that goes without saying. Let's have a final word with you, Aman. Your A Brief History of Financial Bubbles is out. You put a lot of work into it. I wonder what this history tells us about competition between nations. Some people don't think that the fight between the Chinese and the American economy is a zero-sum game when it comes to AI. Others believe it is. Can America and China both win in this new world? And is there equivalent frothiness in China as there is in the US?
Oh, those are deep questions to end on. I think there's a lot of benefit to the countries working together. There is a conversation, I guess, here in the Valley or more broadly about cheap Chinese open weight models being imported and used by the Americans, and then somehow that undercuts American leadership. And should we be concerned about that? Are we rivals, or are we something worse than that, like enemies? I will just say that my daughters both are Mandarin fluent. They both speak Chinese. I'm, by the way, as big a proponent of American and American democracy and all the principles that undergird this country as anyone. But I would hope that a part of that means that you can educate your kids to learn about different cultures and that you can work with them. If my kids now go to Taiwan every summer for a summer in school thing in Taiwan, and they come back full of stories about what they love about Taiwan, and it's the night markets and the culture, and some of the stories that they tell, and the holidays, and appreciation for all that stuff. If we grow like that, to be trade partners, to work together, we've benefited tremendously from importing stuff from China and abroad. I'm a free trader and always have been. We should specialize in what we do and export what we do and what we know. That makes China better. That makes us better. I think that's the secret to creating wealth for everybody. How you divide the pie and who gets trained for that future, those are all fair questions, and how we prepare individuals or different groups for that, for that long arc of history is a fair point. There may be areas where we disagree with China on politics, and there certainly are. There may be territorial disputes over the Taiwan Strait. But my hope is that for the most part, we can be partners in progress on all of that stuff, and work together in what really matters, which is business and culture. They love a lot of our movies in Taiwan. If you go to Europe, people are always talking about Taylor Swift and buying American brands, and they're lining up to go to Starbucks. And then you can disagree with Donald Trump, and you can be angry about something that one of our politicians said on Twitter, and that's all part of it. But I think there's a lot of benefit to being able to work with China and their industrial capacity and the energy population and their innovation. We have so many of our best scientists in China come to get educated in the US and go back. You can see that happening. There's a lot more to gain than to lose if we do this right.
Very cheerful, refreshingly cheerful. Aman Verjee, his new book is out on a brief history of financial bubbles, put a lot of work into it. Dave McClure talking to us. Let me end with you, Dave. You're cautiously optimistic. As I said, it's refreshing. There's so much pessimism around these days in politics and economics. What's your secret sauce? What keeps... I know you can't speak on behalf of Aman, but what keeps you so cheerful?
Yeah. By the way, I want to make sure that people want to check out Aman's book. That URL is bigbubbletrouble.com. So if you want to find out
Big Bubble Trouble. You're his agent too. Do you have time to be his agent?
Yeah, you bet. I guess I would say as a hillbilly who grew up in West Virginia and found my way to California and entrepreneurship, I'm an example of the American dream, and somebody that came from not too much. My family was immigrants from Italy and Ireland and England. 3-4 generations back. I had family who worked in coal mines. Here probably 2-3 generations back. It's continued to be, a great opportunity for a lot of people. I might disagree with Aman on some of the directions of our current administration and politics, but America as a country has always created entrepreneurial opportunities, particularly for immigrants, and I just hope that continues to be the case. In fact, most of these AI companies that we're talking about, a lot of the people working there are immigrants and people who come from other countries, and probably half of the unicorns in Silicon Valley, if not more than half, have foreign, founders involved with them. So I continue to be optimistic about, the progress we've made. Yes, there's problems and challenges for us to overcome. But, I generally feel like we're headed in a positive direction, at least, going forward.
Yeah, and Aman, last time we talked, he talked about the importance of immigration to keep America prosperous and optimistic. Real pleasure to have such cheerful guys on the show in such supposedly dark times. Aman's new book is out. Aman, as you said, you can buy it online, A Brief History of Financial Bubbles. Very important, interesting new book. And great to have you guys. We'll have you back on by the end of the year when...
Great.
As you predicted, well, I'm going to call you guys if OpenAI doesn't go public this year. You're the
all
first
three companies will be public, and the collective market cap will be north of $6 trillion, maybe 7.
Love that.
Hi, this is Andrew again. Thank you so much for listening or watching the show. If you enjoyed it, please subscribe. We're on Substack, YouTube, Apple, Spotify, all the platforms. And I'd be very curious as to your comments as well on what you think of the show, how it can be improved, and the kinds of guests that you would enjoy hearing or listening to in future. Thank you again.